Alrighty, folks. Hope everybody is doing well today. I'm sure everybody's kind of heard about old Moody's. If you remember, what was that? 2023? I think it was 2 years ago that old Fitch's came out and downgraded our debt. Now we got Moody's kind of down, grading our debt and everything like that. And I guess they did it all based off of this great new deal, great new plan, the big deal. I don't know what they're calling this thing, but some tax bill job thing that they're trying to put through Congress that I don't know how that thing's going. I don't think it's doing too well, but who knows? So, and what you've seen based off of that, just kind of going back here just a little bit. When they downgraded us, the bonds kind of dropped like a rock. That's that big red bar. This is a 30-minute chart. And of course, they kept selling it off and everything like that. But all of a sudden, they rally this thing all the way back up to where the news was. Ta-da. And now they kind of pulled back again during the day today. So that's kind of where things are. It's almost like, okay, they did it, but is it really true? And that's the big question is right now is no, how substantial is that? However, on the other side of that, we already know that we have horrible deficits. Um, that's why gold's up here almost at 3,300 again. But we've had these horrible deficits. And the question is this tax bill going to help it or not? I mean, they're going to be cutting the deficit or they're going to be making it worse or whatever it is. And I think that's kind of going to be what's everybody's going to be watching for, see if they can cut the deficit as opposed to make it grow some more. And of course, knowing Congress, they always want to spend money. So odds are it'll probably get worse, right? So we'll just have to see how it comes out. Um, but you can kind of see bonds have been pretty volatile. If you just kind of look at a daily chart of it, they had this nice little rally here and then just kind of dumped things off. That's with that was at the beginning of April. Everything sold off at the beginning of April. Even bonds went down and interest rates went up. And they tried to bounce them a little bit and they kind of pulled back here. So big thing is can they get back below 111? If the bonds get back below 111, interest rates are going to start spiking back up, and here we go. Or do they get back above 117 and everything was cool again? So I think it's kind of something to kind of watch for over the longer term here. Bonds are a very, very long. I mean, this is the 30-year U.S. Treasury bond. Now, what's a week inside of 30 years? Nothing, right? So, but that's the thing. I think this is kind of a longer term look at everything and kind of go from there. Another thing is the track record of Germany has been hate nuclear all you can. And in fact, the last quote unquote administration, government, whatever you call it over in Germany, actually started shutting down all their nuclear reactors and just kind of getting rid of them and everything like this. But now they got a new government in there and they're wanting to kick them all back up and get them all running again. And I think the big scare was what happened over down in Spain, where all their green energy stuff failed and they had to get natural gas power plants back up and running and start generating power again. And I think they got to looking at that going, well, we got all these nuclear reactors that we just kind of shut down here. And they thought, who does a lot of nuclear reactors? France. France gets 70% of their power from nuclear reactors. So they kind of joined up with France now and they're trying to figure out how to do all this cool nuclear energy and all this good stuff. So that just puts one more, big country, and one that I mean it's the largest economy in Europe, and they have a lot of influence in the EU, going to the nuclear side of things. So I think that's going to put a lot more demand on uranium, and you actually seen a little bump up because of the news. If you just look at URA here. This is basically a global ETF on uranium. You got this nice little bump up here. This is a daily chart on that kind of that news. And you can already see that uranium's already been moving up pretty well here. And now they start getting above this, I'll say 28 and a half. And things ought to be really starting to perk up a little more in the good old URA there. So I kind of mentioned this a couple weeks ago. Hey, might be looking to go long URA on a longer term thing, and I think Germany's kind of helping that out a lot, and kind of anxious to kind of see how that goes. So, but that's just a little chink in the old armor for helping the old nuclear side out of things. And of course, we have one of the most boring markets in the world here. This is a daily chart. This is crude oil. And you can kind of see the little sine wave we've been in here for a little while. Between basically 55 and 65 is basically where it's bouncing around, and 60 is a really good pivot. And you keep seeing things that hold on one second here. We keep seeing crude oil and news is coming out. Everything just kind of hanging around this $60 area, and basically that's basically the fracking guys that are pretty much keeping it there. The frackers right now are actually starting to pull back. They're decreasing their rig counts. They're decreasing their exploration just because of where crude oil is at this point in time. What they're worried about is if they start flooding the market, it's going to start getting below that $55, $60 area, and then they're going to be starting to lose their shirt. All right. And that's the thing that you have to kind of be worried about is, um, you know, can they make money or not, or they have to worry about it. And so they're at a point right now where they don't want to put any more money into it because they just don't want to throw money into the dirt and just kind of lose it. So they're trying to keep crude oil buoyed as much as possible. As I've stated earlier in past sessions, as far as just drilling for oil and the oil rigs and the pump jacks and stuff like that, it's between 40 and $50 that they're pretty much at break even. So they're $15 a barrel high or $12 a barrel high at the minimum right now. So they're still doing pretty well, but the fracker guys aren't. They got to have $60 oil to do that. And right now they keep sitting right at $60. So they don't want to put any more money into anything. If that's the case, that actually argues that, well, crude oil should hold in here. Now, does it rally off of here? I don't know. OPEC's been coming out saying that we're going to increase production, which is going to put downside pressure on it. But again, we're kind of in a catch-22. This side is bullish, the other side is bearish. And so I think that's why crude oil's had a really hard time in this area just to say, hey, no, do we need to go down? Do we need to go up? I think if we got back above 65, I think we got the answer to the upside. Below 55, answer to the downside. The rest of it is just day trading, I guess. Just seeing which way it's going to go. So, but right now, they've kind of bounced up off their lows. They're trading closer to the highs and the lows of this little, area right in here. That doesn't mean that we don't roll right back over. And so, I mean, here they consolidated and then they dumped it off. So, do they consolidate again and then do they dump it off? That's the big question. So, that might be the case. And that's just kind of one thing we need to kind of look at a little bit and kind of concentrate on a little more. One other thing that happened this morning is good old Home Depot. Earnings came out, they were good. And one thing that I thought was really interesting that was stated was that Home Depot is actually doing something a little different with the old tariff thing. They're not going to pass on any cost increases based off tariffs to their customers. Plus sign there, right? Another thing is they're telling all their vendors and everything like that, if you're buying from China, stop, go find it somewhere else. So I think they're trying to keep away from the tariff thing, and I thought that was pretty funny. But that's basically what they're doing, which I guess is the way to get around it all and everything like that. So we'll kind of see how Home Depot does based off that. You might have Home Depot doing a whole lot better and moving back up to that $400 area based off of that. You might get more customers there knowing that they're not going to get tariffed to death and they're not buying China stuff. I don't know. So there it is. But that's basically what they've said. I don't know if Lowe's is going to do the same thing. I think Lowe's earnings comes out tomorrow or the next day or something like that. So we'll see what they say, see if they kind of match up to what old you know Home Depot has done and everything like that, and we'll kind of go from there. But yeah, that is one thing to kind of keep your ear to the ground on is not only are they still coming out and saying projecting their future earnings, giving expectations and stuff like that, which a lot of companies did not give forward guidance. But another thing is what are they doing with the tariffs? Like Walmart came out and said, well, we're just going to pass it on to all the customers. Well, Home Depot is just like, yeah, well. And if you noticed, Dollar General's stock kind of jumped up off on that one. Um, so we'll kind of see if Home Depot can kind of survive the current tariff war and all that good stuff. And we'll see how Lowe's comes out. I think it's in the next day or two. I got it on my wall over here somewhere. Today is the 20th, right? Yeah, tomorrow morning. You have Lowe's, Target, Yum Brands, TJ Maxx, Baidu. Got several of them coming out tomorrow morning. So it's something to kind of keep your eye on there. But anyhow, but that's kind of what we've got looking at today. This week, we really don't have much news except for on Thursday. Thursday, of course, we get the normal job. Well, I say Thursday. Tomorrow, we're going to get the EIA petroleum status report. There it is. We get that one every Wednesday. So we'll see what crude oil inventories does and all that good stuff. Um, but as far as anything else this week, Thursday is kind of the bigger day where we get the jobless claims, and then we're going to get the S&P Global Manufacturing that comes out at like 9:45 Eastern. And then I think we have existing home sales that comes out at 9. So we got some stuff on Thursday coming out. And it'll be interesting to kind of see how that does. Ah, thank you, Jim. Appreciate that. But yeah, I mean that's the big thing is kind of what is going on. I mean, and I keep wanting to say short crude, buy gold, short crude. There it is. But like I said, crude's just got a lot of different newses coming out there, and I think we're going to be seeing it kind of consolidate and hang out for a little bit more than anything, as the traders out there try to figure out who's increasing production, who's decreasing production, and how is that going to affect our barrel of oil more. I mean, we trade West Texas Intermediate crude. That's the U.S. crude oil contract. So, which doesn't have anything to do with OPEC and their Brent crude and all that stuff. But that being said, um, what they do really affects the supply and demand here in the United States based off our crude oil market. Do we have to export more? Are we going to be holding more? Are we going to get more supply because nobody's buying our oil because theirs is cheaper, whatever it may be? So I'll let the market try to figure that out and we'll kind of go from there. So, but anyway, with that, I think we'll kind of wrap things up and see what all the news and all the earnings and everything like that come out by Thursday. And then Thursday we'll have kind of maybe a different idea about what crude oil is going to be doing and various other things. So, but if you have any questions, let me know. Otherwise, we will wrap things up and go from there. Yep. Thank you all, and we'll see you Thursday.